Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, we are going to evaluate in the fundamental way Delta Airlines, okay? So we are going to do a valuation like I did on Facebook and Carnival Cruise. So if you haven't, go to check it out, those videos. I think they are quite interesting. So let's start. Leave me a like if you find this video interesting, so you're gonna help me with the channel, please. It's very important for me. And subscribe to the channel. Let's begin. Alright guys, so here we are in our Excel sheet and let's take a look. As always, when I do valuations, I don't find just one price, but I find 3, 4, 5 prices, okay, with different valuations. With this valuation, I used a discounted free cash flow valuation, and I find 1, 2, 3, 4 prices with it, and I'm gonna use a book to value valuation and the free cash flow yield valuation. Okay, so let's go. All right, now before we start, let's just do a summary of the balance sheet. Okay, this is from a previous video, this one. Anyway, just briefly, what we have to remember here is that between the four major US airlines, Delta Airlines is the one with the best margins, okay, and in terms of current ratio is the second best, okay. Just Southwest Airlines is the best, and after that we have Delta. So in terms of balance sheets, okay, it's risky, it's a risky company, it's a risky industry that has been hit by this pandemic, black swan event. Anyway, is of course less risky than American Airlines, okay? So total assets divided by total liabilities, we are above 1, and in terms of debt to equity ratio, we have 160%, okay? So Southwest in terms of debt, it's better, okay? But anyway, let's take a look now at the valuation. And so I said 4 prices with the discounted free cash flow valuation, okay? So let's see what we have. This is the bad scenario in my opinion, and the rate of return used is 8.5%, which is above the market return and is also above the average cost of capital for Delta Airlines. Okay, so I want to be a little bit more careful, so I put this higher. Okay, great. It's better to be conservative because we have also the risk of bankruptcy. Okay, perpetual growth 2.50%. And now let's start the first scenario. Okay, the first scenario, I say, well, in 2019 they made 3.5 billion in free cash flows, and I say, well, in 2020 they're gonna make 0, and slow recovery, very slow recovery, and 2021 0.8, 1.2, 1.6, and in 2024 2 billion in free cash flow. And look at that, it's not even the 70% of what they were making before. Okay, so very slow recovery, bad scenario. And so today's company's value is 27.9 billion divided by the total amount of shares outstanding. It gives us a fair price of 43.80. Great. The problem is we have to deduct the net debt of Delta, which is huge, $17.5 billion. Okay, so when we deduct this from the today's company value and we divide again by the total amount of shares outstanding, we have a fair price of $16.32. Okay, now the other one, another scenario, this is a little bit more a fast recovery, okay? So 2020, instead of 0, we have 0.2, very low, and slow recovery, but this recovery gets faster from 2024, okay? 2023, sorry. So the same, but in 2023 gets faster. And what we have is that today's company value of 37 billion. And again, the fair price, we have to deduct the net debt, and the result is $30.83. Okay, same rate of return, 8.5, and same perpetual growth, 2.50. Now another scenario, this one is even faster. Okay, basically we have the same for 2020 and 2021, but in 2022 we have 1.8, and 2023 2.4, 2024 2.8. Okay, even in this scenario in 2024 they are not making the same as they were making before. Okay, so it's continuous low recovery, but it's getting faster. Okay, same requirements, and we get a fair price of 61.52, and we have to deduct the huge net debt of Delta Airlines. Okay, and we get an adjusted fair price of $34.04 per share. Okay, now the last scenario with this kind of valuation is a more positive one. The requirements are still the same, and what we have here is in 2020 is still bad, 0.2, but we get better from the next year. Is the kind of scenario where probably they find a solution to this pandemic situation and things get better in a faster way. Okay, so 1.5, 2.2, 2.5, and 3.2. So in 2024 we are going to have a similar free cash flows as they were making before. Okay, the fair value is this one, and we adjust as always by the net debt, and we get an adjusted fair price of 43.49. Okay, now pay attention, I have been in all those scenarios very conservative with the free cash flows, okay, with the estimates. I like to be conservative in those cases, okay, especially in a risky industry as airlines. The book to value price, okay, so for this valuation, you know already if you follow my channel, you just go in the balance sheet and you take the stockholder equity and you divide it by the total amount of shares outstanding, which is 0.638 billion. Okay, and you get this price, 22.43, and the last valuation is the free cash flow yield valuation. Okay, so in 2021 we take the estimated free cash flow, which is just an average of those previous ones, so 0.9 billion, and we divide it by the total amount of shares outstanding, and that gives us $1.41 per share, okay, in free cash flows. Now if we go back, we see that the average yield of free cash flow for Delta Airlines is 5%. Okay, so we just divide this by 5% and we get $28.21 okay, in 2021. Be careful, we have to push this back in 2020, and that's the price we get, $24.96. Okay, great. Now as always, we take an average of this plus all the adjusted ones. Okay, so we have 6 prices, and what we get is $29.42. Okay, we take a 20% as a safety margin and we get 23.53. meaning that the fair price stands in this range. Okay, that's a range, and the fair price stands somewhere in between. So it can be 23, can be 29. Okay, that's the fair price range for Delta. We just simply take an average of this and we get 26.47 as a fair price, okay, as an ideal fair price. 26.47 for Delta, okay? Great. Now, I want you to pay attention to this because this is, again, those are the number of passengers that every day pass through the checkpoints, okay, comparing with the previous. And that is very important because this valuation is not just talking, it is made on real numbers, okay? So that's very important, this document. I told you in the previous videos, I told you many times, and that's the only thing you have to watch for airlines, because that is very important for two main reasons. The first reason is, as I showed you in the previous video, if those numbers go high and high, not as much, okay, but high around 500,000 passengers per day, we have that those companies, they are gonna go very near to break even, meaning that they are gonna stop to burn cash every day. And so the bankruptcy risk can start to fade away, okay? And it's very important actually, because if we take a look during the middle of the pandemic, we were below 100,000, and right now we are more than 3 times those numbers, okay? Today is 321,000, but we have been consistently above 250,000, okay? So it's very, very positive. Take a look at that, okay? Because this is actually very important. And the second reason why is because those cash flows that you see in the valuation, okay, so those cash flows here rely on those numbers, okay? So if those numbers goes up, those cash flows here are gonna change, okay? And basically by doing that, you are changing the fundamentals. And if those numbers goes up pretty quick, because probably like they find a solution and they find so this problem goes away and people are back to traveling as usual, okay? So it's a faster recovery and not a slow recovery. It happens that you are changing those fundamentals, and when you change those numbers in a positive way, the price explodes, okay? It goes up very, very, very fast. Just take a look at just this simple difference from this scenario and this scenario, which are not very different, okay? It's just this and this are different, okay? But it makes a lot of difference at the end, okay? So be careful, because we can have the situation where if those numbers are gonna change, okay, you are actually changing the fundamentals of the airlines industry, and we can have a spike, okay, a spike in the industry. And if that happens, don't trust the people that are gonna tell you that the market is crazy. But it's not crazy, it's just following the fundamentals, okay? So if you change the fundamentals in a positive way, the fair price goes up and the market just goes to the fair price, okay? That's what the markets do all the times. All right, so right now with this uncertainty, I would say that in my opinion, this is the fair price for Delta, so $26.47. Let's see, keep an eye on that. Keep an eye on that, it's very important in my opinion for the entire industry, okay? And let's see how it goes. If they find a drug, if they find a vaccine, is gonna be as I told you before, pay attention because those fundamentals can change. And if you change those in a positive way, well, you're gonna see great volatility and a huge spike in the price of Delta Airlines. Okay, so I hope you find this video interesting. Leave me a like and leave me a comment below. Tell me what you think about that and subscribe to the channel and have a wonderful day.